Welcome back. In today's video, I want to talk about the difference between the portfolio and the trade IDs. If we click here on the portfolio, we can see that we reach the different articles that I post every day regarding my own portfolio. Here is a table that I edit every day, which is made of two parts. The first part here calculates the risk of the portfolio, taking into account the running positions. Here I have two positions. These are two long positions. This is the entry price of these positions and the stop of the positions. This stop has been raised because we are now much higher than 50. And you can see that there is only 1% that this stop will be hit in the next 5 days. Because of that, the maximum loss, of course, is 1% only, but the total risk on this position for the portfolio is 0% because 1% times 1% is basically 0%. Okay, you can see here for NTY that the stop is close by. We have 11% probability to hit the stop in the next 5 days. And if we hit the stop, the loss would be about 4.3%, which basically makes a risk of 0.09% on the portfolio for the next 5 days. So this allows me to manage the risk of the portfolio. The maximum drawdown for the portfolio would be minus 1%. Why? Because each position has a weight of 20%, because I have 5 positions. So the maximum drawdown would be here minus 4% divided by 5, which is 0.86%. It's the same also for ETP. You see I have a maximum loss of 1%, divided by 5, it is 0.2% for this specific position. Okay. Here I show the trade that I closed yesterday. You see there were 5 trades. This is the weight of the different trades. For example, HAC, I had 2 half positions, which makes 20% altogether. GDX, I only have a half position. This GDX position was closed at a profit. The HAC position was closed at a loss. And the dust and this position were also closed at a profit. Okay, so this is basically my everyday running board to manage my risk. Then we have below the trade IDs of the day. These are the long IDs and the short IDs. I often put different colors. In yellow are the trades I am really interested in. In blue, these are the very special trades. For example, here ESV is an oil driller. Normally it should be on the short side, but ESV has issued good earnings yesterday and it could break out and run a little bit higher. So it could be a 2-3 days trade, but on the long side. These trades here in pink are all the trades in pink basically are either breakout or breakdown trades. Okay, this list of trades is half generated automatically, and of course also I check all the trades manually to see which are the most interesting. These trades, in fact, you will find them in the trade ID section. Before I move to the trade ID section, whenever I enter a trade for the portfolio, I send an email. If you look at here, these are all the emails I have sent recently, and you can see here that I have already sent about 700 emails with a different change in the portfolio. You can see that this happened since April of last year. So yesterday, for example, I sent 1, 2, 3, 4 different emails regarding the different positions. So I always send an email whenever I'm ready to place an order or when the order has been executed. And usually I try to attach some graphs to explain the hows and the why of this or that decision. Okay, so these trade IDs here will be uploaded in the trade ID section when the market opens. You see, these are the trade IDs of yesterday. When the market opens, the system starts monitoring all these trade IDs, and when one of them triggers, the system will send a specific alert email to all the subscribers to say, okay, something is happening. This is not because I'm receiving an alert that I will enter that trade. For example, for pay here, we got an alert yesterday. I think it's about at midday, but I didn't enter the trade. Why? Because yesterday, if I look at the real-time system, I click on the 20 DMF, you can see that yesterday money was really moving here into the market. Money was moving into the market, and I don't want to short individual stocks when we have such a positive day. And also what I used to do is to go on the real-time effective volume, and then I would type there the ticker pay, and I would have a look at the effective volume pattern to see what is happening. And we can see that yesterday morning we had this alert. A short alert is issued when we go down after breaking through the alert. So we had the alert issued about here at about midday, and we can see that at this point the effective volume was rather positive, so there was no reason for me to enter a short. But we can see that at the end of the day a large player started selling. That is why pay is again back in the short IDs of today. You can see it in the portfolio management. You can see that pay is here as a new short ID for today. Thank you very much.